Hey folks, LA Little here today. It is January 12th. We're about midway through the session, actually towards the last couple hours of the session. And today I'm just going to go over the general indexes because I think they're instructive here at this point as to what's happening, because so much happened over the weekend. As you know, we did another video already on the financials, in particular the credit card companies and the 10% cap that Trump has said. But then we had Federal Reserve coming under subpoena from this administration as they push the agenda to replace the Fed and to make it bend to their will. That is the administration's will. And so that had a chilling effect on the markets to start with, but let's pop over and look at them now. They have just shot straight back up, right? Like nothing happened. And so when you look at this, you open down here. I'm looking at the SPY, that's about 690, a little under 691. And we're back up at 695, 696, pushing new highs. Same thing on the NASDAQ, opens down, and then they push it right back up. If we go over and look at the SOXX, now the SOXX also took a big hit, and the SOXX's been one of the strongest of the sectors, and then they're at new highs as well. And then finally, if I move this out of the way, this is the XLF, which you can see here if I blow it up. It had a huge run back here, faded, and then spiked down this morning and trying to work its way back up too. So nothing seems to want to go down. There's helium balloons everywhere. Let's look at the dollar index though, because this is the one to me that's going to be the thing to watch. And the reason I say that is because the dollar index it should be weakening if in fact this Fed independence is being called into question. And when we look at it, and I'm going to go the monthly to start with here. When we look at it on the monthly, the dollar had been setting highs, lower highs, then it got a pop up, was trying to change direction, right, back to the continuation, and then collapsed back down. And now you've kind of got, if you're a classical TA person, you're looking at that as like a bear flag. From a neoclassical perspective, you essentially have bearish retest regions that are being tested on the bounce, right, and now are regenerating to the downside. That's a negative for the dollar. If you look at it over here, you actually have a couple of setups that could make it stronger if they could get up there and break, but I don't know that they're going to, right? There's a swing point high here as well, because if you look at the daily over here, a bearish retest regen in this area, you have a bullish retest regen here that was tested this morning, so no longer is the first test. If it comes back again, it will be the second test. And so the key, if you're watching the dollar, and I think you should be watching the dollar, is whether this area holds. And that price point is 98.42 on the DXY. If the dollar continues the downtrend, so in other words, if this push sideways starts another leg down, that's going to put pressure primarily on interest rates, I would think. And we're trying to bring rates down. Dollar going down, especially if it does it in a vacuum, you're probably going to see the interest rates try to creep back higher. So let's because basically if the dollar is crumbling because of Fed independence, do you want to loan money based on the dollar? Not really. I mean, I wouldn't. I certainly would want more money if I was going to do it. And so, if we see pressure on the index, the dollar index, and we see that pressure manifest itself in such a way that the interest rates go up, I think that's going to give the market a pause. And so that's the thing I'm focused on. If we look at the markets real quickly here and kind of use that as a wrap, here's your S&P 500. trying to make the move to 7,000. Big number, round number, 7,000. 698,329 is the high so far today. If we look at the NDX is poking towards that swing point. 25835 is the high, and it's just right at it. So we'll see if it closes over it today. If it does, that gives it another shot at the highs again, right? And so, we could see these things just inch their way up over the next few days towards the end of the week, and try to get up there. Now, you got a lot of other stuff that's happening at the same time. You got earnings this week. Start with JPM in the morning. You're going to have Taiwan Semiconductor. You got a bunch of other financial names as well coming out the rest of the week. Then you got Taiwan Semiconductor on Thursday. You've got inflation numbers tomorrow. And so there's just a lot happening here outside of all the disruption that's constantly going on in this market with the administration. So at this point, I think we're handing out that rope, if you will, to the market and allowing it to hang itself. How long is it going to take? I don't know. I would keep it close to the vest if I were you, and that's where I sit. Have a great one. Give me a like if you like what I'm doing. Subscribe, hit the alert button, and stay up to date with these videos as they arrive. Take care.